All right, so Ken, you got a price target of $200, a bit more optimistic than the consensus of about 188. Does that signal you have confidence in Boeing's ability to ramp up production of the MAX to 38 a month? That's something a lot of analysts have told us is really key to the turnaround here.
Yeah, that's fundamentally it. We need to see better execution from Boeing, which obviously translates to better cash flow and getting the MAX to 38 a month, both from a deliveries, I would say more importantly, near term, as well as production. Key to that bogey to get to the free cash generation or break even for the company. But bottom line, we are confident we do start to see better execution, which translates to better cash, which obviously is the most important metric for Boeing at this point in the recovery.
All right, so we just mentioned that Boeing shares relatively flat since they pre-announced that earnings loss. But when I look at some of their suppliers, I'm thinking like a Howmet Aerospace, a Triumph Group. Those shares are actually down. What does this report mean for their suppliers and also for their biggest competitor, Airbus?
Well, it's important to remember that Boeing has significant inventory, especially on the MAX. So suppliers will likely be running at production levels lower than Boeing for several quarters as Boeing works down inventory. So you do see some lingering destocking risk for some suppliers. So that's obviously, I think, what you're seeing now and reflected in that sentiment. And broadly speaking, when we think about competition for Boeing, Boeing just needs to take care of its own business here. It needs to execute, and I think it's got a great opportunity to do that. And if it can, I think you've got continued room for the shares to work.